What happens to Bitcoin if Binance goes down? Hence, the ongoing media reports and social media rumors about higher than usual outflows from the world's largest crypto exchange Binance are raising alarm bells among crypto investors and the wider investing community. Binance's controversial Proof of Reserves report, intended to calm investors down, has seemed to further fuel speculation about the company's finances. Stark also slammed Binance for hiring Mazars to prepare its Proof of Reserves report instead of using the services of one of the Big Four audit firms. Before we continue, we want to inform you about India's best local e-commerce marketplace, lawfaroshop.com, is empowering Indian businesses and consumers to connect with each other. We are the one-stop destination for everything from shoes to hat, electronics to clothing, toys and more. Our mission is to create a platform that will ensure that Indian brands and businesses get the right exposure and reach the right audience in the world. According to blockchain intelligence platform Nansen, fears over Binance's collateralization triggered massive withdrawals at the exchange, with investors pulling out more than $2 billion in just 2 days. Still, it could be that substantial withdrawals suggest that investors are looking to move their assets to another platform or take them into self-custody, following the Proof of Reserves report, which didn't exactly calm market participants as intended. Other crypto exchanges are also witnessing substantial outflows since the fall of FTX, one of the largest crypto exchanges at the time. However, that may not be particularly true for Bitcoin and other digital assets as crypto-specific news continues to hamper investor confidence. Shaky confidence and potential troubles at Binance could seriously hurt the crypto ecosystem. Bitcoin fell over 20% in early November on the FTX collapse, with about $250 million wiped out of the total crypto market cap in response to the FTX fallout. Many fear that the breakdown following a potential collapse of Binance could be much worse, yielding severe and long-term consequences for the entire ecosystem centered around Bitcoin. First, the overall risk sentiment surrounding Bitcoin and crypto is much worse than at the time before the FTX collapse. Any major troubles at Binance could create a snowball effect and ignite a new round of extreme withdrawals, ultimately leading to more bankruptcies. This week, investment titan VanEck predicted that Bitcoin price could remain under pressure in early 2023 as several major mining firms are on the brink of a collapse. VanEck said Bitcoin could plunge to as low as $10,000 in the first quarter of 2023, before eventually recovering to $30,000 later in the year. The Q1 23 sell-off would mark the low point of the crypto winter, according to Matthew Ziegel, head of digital assets research at VanEck. However, the recovery could only occur without negative crypto-specific news, like FTX or Binance. Earlier this year, the fall of the crypto lender Celsius network eradicated over $4 billion of user funds. Hence, one of the key takeaways from the FTX drama is the increasing need for the self-custody of digital assets. As evidenced by several examples this year, centralized exchanges offer a convenient way for users to store digital assets. Earlier this week, Ray Youssef, the CEO of crypto exchange Paxful, encouraged users to switch to self-custody and move their crypto funds to external hardware wallets. Despite the reassurance from Binance, which insists it can still attract deposits while withdrawals are stabilizing, the crypto community is increasingly nervous about the financial state of the world's largest digital asset exchange. A Binance breakdown, albeit seemingly unlikely, is poised to produce a much stronger, negative impact on the entire crypto community, given the company's global footprint and importance, if it were to happen. Potential troubles at Binance, which come just over a month after the FTX collapse, could spark another major sell-off in Bitcoin. While this would be an evident catastrophe for many, long-term Bitcoin investors would likely see it as an attractive buying opportunity.